Good afternoon, good morning, good day, depending on where you're listening from. Welcome to Profit and Beauty. Now, this show was created for salon owners who have decided to start running their salons like a business rather than a hustle. The focus of the show is to help salon owners understand the numbers behind their business so that they can grow and make extraordinary profits. Without this knowledge, it's really hard, if not impossible, for your salon to reach its true potential. My name is Desiree Anderson, and I have 19 years experience as a hairstylist and salon owner. I currently work as a certified public accountant, working mainly with salon owners and hairstylists. My background as a former stylist and salon owner gives me a much better understanding of what our industry professionals need and desire. So if you are a hairstylist or salon owner interested in running your salon like a business, then this show is for you. On the other hand, if you are a hairstylist or salon owner not interested in running your salon like a business, this show may or may not be for you. I just hope you keep listening, and maybe something you hear in one of the episodes will make you decide to turn your craft from a hustle into a business that you can scale and grow. So sit back and enjoy this week's episode. Hi everyone, and welcome back to Profit and Beauty. Now, on today's show, I'm going to be talking about the CARES Act and the different provisions that are included in this bill. As all of you know by now, the United States is going through a situation that we have never, ever gone through before, at least not in our lifetimes. We don't remember when something like this ever happened, and we've had disasters in the past, but nothing to this extent. And because of that, the president signed into law the CARES Act sometime last week. So I'm going to first start out by defining what the CARES Act is. That way you have a good idea of exactly what the intention of the bill was. So the CARES Act is the largest economic stimulus package in the history of the United States. It includes approximately $2 trillion to help people and businesses impacted by COVID-19. Now, many beauty professionals are asking the question, what does that mean for me? So how does the CARES Act impact the beauty industry? Now, this is a great question because most people within the beauty industry, or should I say a lot of people within the beauty industry, are self-employed. Now, as a self-employed individuals, there isn't that much help when it comes to times of distress. Usually, the government focuses more on larger businesses and individuals who are employees of a business, usually W-2 employees. They get help from the states because the businesses that they work for normally pay into unemployment. So they normally have that security blanket. And normally big businesses have the security blanket of the government, and those of us in the middle that have our own businesses who are self-employed, we usually don't have a security net unless we create one for ourselves. Okay, so question. And the way this show is going to go today, I'm going to format the show in a more of a question and answer format, because some of the things I'm going to be talking about are the questions that I have received from my clients, mostly clients who are in the beauty industry professional. So how does the CARES Act impact the beauty industry? So the Act includes several provisions that impact citizens of the United States and business owners, including beauty industry professionals. So beauty industry professionals consist of salon owners, booth renters, commissioned stylists, W-2 employees, and also independent contractor. And not to leave out the mobile stylists, because there are some stylists that don't even work in a salon. They're mobile stylists and they work for these apps. So they are also being impacted. So on this podcast, I am only going to focus on 3 of the provisions or should I say 4 of the provisions that my clients ask me about the most. And they include the rebates or the stimulus check, the pandemic unemployment insurance, the payroll or also known as the Paycheck Protection Plan, and also the the economic injury disaster loan. So let's start out with the rebate checks, which are also known as stimulus checks. Okay, so who qualifies and how much you'll be receiving? Well, all Americans will receive a check, with the exception of individuals who owe child support. So that's what it is right now. If you owe child support, you're not going to receive a check. But other than that, all other individuals will receive a check. Now, what returns does the IRS look at to determine if and how much of a rebate check you're going to receive? So even though everyone is receiving a check, the IRS, they are still looking to prior year tax returns to determine how much you get. Okay, so what are they looking for? They're looking for either your 2018 return or your 2019 return. If you haven't filed either year's return, you might want to think about doing so as soon as possible. So you're not going to receive a check if you haven't filed your 2018 or your 2019 tax return. Now, people are asking me, oh, I haven't filed a return since, let's say, 2015. Do I still qualify? Well, if you haven't filed a return since 2015, the answer is no, you don't qualify. However, you can go ahead and just file your 18 or your 19 return, and then you will qualify. Then you can always go back and file the ones that you haven't filed. So don't think that you have to file 15, 16, 17, 18 and 19 to qualify. No, that's not the case. You can go back and file 18 and you can file 19, either one, and still qualify. But of course, since you've done that, you want to also make sure you go back and file the returns that you have not filed. That's if you are required to file a tax return. So if your total income from 2018 or 2019 didn't require that you file a return, you will still need to file one in order for you to receive a check. So what does this mean? This means that depending upon what your income is for a certain year, you may or may not be required to file a tax return. There is a threshold where you are not required to file a tax return. So therefore, you don't have to, and it's okay. The IRS won't come after you. However, under this circumstance, you are required to have a return in the system in order for you to receive the check. So if you're one of those ones that is not required to file a return, I suggest that you go ahead and do so. Just file the return for this particular reason. The only exception is for Social Security recipients. So if you receive, or if you know anyone that receives Social Security, you're not required to file a return. Okay. Now this was something that was just changed, because initially when the bill came out, it was stated that even if you weren't required to file a tax return as a Social Security recipient, they said that you would have to then file one for this specific purpose. But that changed a few days after the bill was signed, where as a Social Security recipient, you no longer have to file a tax return. The IRS will just look at your information from Social Security and issue you a check that way. Now, keep in mind that all of this information is so fluid. So I honestly wouldn't be surprised if they come back and then once again change the requirements for individuals who are not required to file a return because of their income threshold. And they may come back and say, oh, well, don't worry about filing one. But I don't know if that's going to happen, only because if you are technically required to file a return, the IRS doesn't really know whether or not you were supposed to or weren't supposed to, and they may not want to take your word for it that you weren't required to. So I'm not sure if that particular provision is going to change, but you never know. So as of today, just make sure that if you haven't filed a return due to your income threshold, that you go ahead and file one. The next question I get is, how much will I receive? Well, the amount you receive is going to be based upon your tax filing status on your 2018 or 2019 tax return, as well as your adjusted gross income. So if you file single, you're going to get $1,200. If you file married filing jointly, it's $1,200 per couple, so that's $2,400. And if you are head of household, meaning that you have children, then that means that you will receive $1,200. Now, being head of household doesn't necessarily mean you have to have a child. You could also be taking care of your parents who don't necessarily live with you, but you are taking care of them. Well, that will qualify you under certain circumstances to file head of household, and in that case, you will receive $1,200. In addition to that, if you have children who are under the age of 17, so if they're 1 year old to 16 years old, you'll receive $500 for each additional child. Now, keep in mind, or should I say each additional dependent, because you may have a dependent who may not necessarily be your child, but they are under 16 years old and they are a dependent. You're going to receive $500 for each additional dependent, who is under 17 years old. Now, if you have other dependents who are over the age of 17, you're not going to receive a check for those particular individuals. So just keep that in mind. You may have a child who is in college, or you may have other dependents who may not be children, but as long as they are over the age of 17, you are not going to receive a check for those individuals. Now, in addition to that, if you have a dependent that is on your tax return who is over the age of 17, okay, they also will not receive a check. Okay, so that means that person is just not going to receive a check. Okay. Now the question is, how much of a check are you going to receive based upon your income? So there are income limitations. So I'm going to kick out numbers that are going to let you know if you're going to receive the entire $1,200 or just a portion of the $1,200 or nothing. So if you file single and you make $75,000 or less in a year, you're going to get the entire $1,200. If you make between $75,000 and $99,000, you're going to get a prorated amount of the $1,200, meaning you're not going to get the entire amount. You'll get a prorated amount. And the amount that you received is normally reduced by $5 for every increase of $100 between 75 and 99. If you're married filing jointly and you make $150,000, you're going to receive the entire $2,400. If you make between $150,000 and $198,000, you're going to also receive a prorated amount. If you receive over $198,000, you will not be receiving a check. And if you're single and you make over $99,000, you're not going to be receiving a check. Okay, if you are a head of household and you make $112,500 or less, you will be receiving the entire $1,200. If you make between that amount and $136,500, you're going to receive a prorated amount. If you make more than $136,500, you won't be receiving a check. Now, there is an exception to that. For example, if you have dependents, okay, who are under the age of 17, you're going to then add an additional $10,000 to the upper limit threshold of the amount that will cause you to receive or not to receive a check. I know this is a little confusing, so let me use an example. Let's say, for example, your filing status is married filing jointly and you have no children, okay? If you make over $198,000, you're not going to receive a check. However, if you have two children, you then have to add $10,000 per child to the 198. So if you have two children, you're going to add $20,000 to the 198,000, and now you will receive a check if you make up to $218,000. So that's the exception when it comes to the adjusted gross income. And I know this sounds a little bit confusing, but I'm trying to make it to make sense. Okay. Now, the next question is, how does the IRS send the checks? Well, if you put your direct deposit information on your 2018 or your 2019 tax return, then the IRS is going to send you the funds via your direct deposit. On the other hand, if you usually get mailed a check for your refund, then it's likely to be a while before the check arrives, okay? Because really, keep in mind, the IRS really doesn't want to have to mail out checks. And that's one of the reasons why they're in the process of creating some portals. They're creating payment portals for people to sign into and to provide their banking information so that they can have their payments directly deposited into their accounts. They're trying to avoid mailing the checks, because if they mail those checks, honestly speaking, I have heard that it could take months for you to get your check. So that's the reason why their preference is to directly deposit it into your account. So I'll update you to let you guys know when those portals are ready for you to go in and create a portal so you can receive your rebate check via direct deposit. Now, once again, that could change, but as of today, that's what they're saying. But if it changes, I definitely will keep you posted. So the next question I get is, when should I expect to receive my check? And the answer to that question is, I don't know. So there was an initial estimate of the first payment going out by April 6th of this year. However, in normal times, the IRS tries to be as accurate when it comes to timing. Now, these aren't normal times, so they may be a little bit behind. Now, remember, just like most workers in the United States, including us, IRS employees are also working from home, so things may not run as smoothly as we would like them to. So I just say, just be patient while they sort things out, okay? Now, the next provision provided by the CARES Act is the pandemic unemployment benefits. So under normal circumstances, as you know, as self-employed individuals, booth renters, salon suite owners, mobile stylists, we don't qualify for unemployment benefits because we don't pay into the system. The only people that qualify for unemployment benefits would be stylists who are paid as W-2 employees. Okay, so the question is, do non-employee beauty industry professionals qualify for unemployment benefits under the CARES Act? And the answer to that question is yes. So under the CARES Act, the federal government expanded the definition of who is eligible for unemployment benefits to include individuals who would otherwise not qualify for regular unemployment or extended benefits under state or federal law. This expansion covers self-employed individuals, which of course applies to several individuals within the beauty industry. The next question is, so how do I apply for unemployment benefits? Well, so far, the way it stands as of today, you apply with your state. Now, every state is different, so my advice is to go onto your state's website and follow the directions given. Now, I'm very aware that because of the number of people who are trying to apply, a lot of these state websites are crashing. So people aren't able to even go on there and apply. Okay. Now, I've had people I know people who here in Georgia who are beauty industry professionals who have applied and they have been denied. They were told you do not qualify. Now, I don't know whether or not that message that they're getting that they don't qualify. Well, let me take that back. Now, even though they don't qualify for state benefits, they will qualify for the unemployment benefits, the pandemic unemployment benefits. So don't get discouraged if you receive a message saying that you do not qualify. Now, the question that I am not sure of is, are you going to receive benefits from the state as well as pandemic benefits as self-employed individuals? I don't know the answer to that question, but I do know that regardless of what happens, you will receive the pandemic unemployment benefits. As for the state unemployed benefits, that's yet to be determined. Now, you may or may not qualify for state unemployment benefits. Okay, as I said earlier, however, you should still apply anyway because your application is going to be used for your CARES unemployment benefits. So what this means is even if you apply on your state website and they tell you that you don't qualify, the application that you filled in is going to roll into your CARES unemployment benefits, and that's how you're going to receive the benefits from the CARES package. Okay, so that's how it is as of today. That might change, and I don't know if they're going to change the way they're doing things because of the fact that the state websites are having a really hard time keeping up with all of the people who are trying to apply. So as far as I know, what they might do is they may break it up and they may say, okay, if you are applying for state unemployment, apply here, which would be applying to your state unemployment, or rather applying through your state unemployment website, and they may create a brand new website for people who ordinarily won't be covered under state unemployment. They may have another website for them to apply. I don't know, but the way that it is as of today, regardless of whether or not you think you qualify, you need to apply through your state. Okay. The next question I get is, how much will I receive? Well, every state has its own formula that they use to calculate unemployment benefits. There is a minimum of what you could possibly receive, and then there is a maximum of what you will receive. So you're going to receive whatever your state provides if you are deemed to be eligible by the state, plus an additional $600 from the CARES Act plan. So what does this mean? This means that if you are a W-2 employee and you work for a salon, you obviously qualify for state unemployment. So let's assume that based upon how much money you made and based upon the information that they have, that you qualify for $300 from your state. You are going to get $300 from your state as unemployment benefits. In addition to that, you're going to get $600 under the pandemic unemployment benefit plan. So you're going to get a total of $900 every week. For those of us that are, for those people who are self-employed, if for some reason your state unemployment benefits equals zero, which it may or it may not, I don't know, you are going to at the very least, get the $600 from the pandemic unemployment benefit package. So that's how that works. If anything changes between now and next week, I will definitely come on here with an update. Also, I'm doing a lot of updates. I'm providing a lot of updates on my Instagram page and on my Facebook page. So if you would like to follow me at Desiree Anderson, and that is Desarie. My last name is Anderson, Anderson, on Instagram. I'll be doing a lot of updates on there. And then Facebook, you can find me under Accountants for Hairstylists. That's Accountants, the number 4, Hairstylist, or Profit and Beauty, whichever one. Okay, you can go there for any updates. Okay, so now let's talk about some of the loans that are available to small businesses and to self-employed individuals. One of the loans is called the Payroll Protection Program, which is also called the Paycheck Protection Program, or for short, PPP. So the PPP loan provides up to $10 million in loans. You'll need to apply for this loan through an SBA certified lender. So you have to make sure whoever you're using to apply for the loan has been certified by the SBA. The first date to start applying for this loan was on April 3rd. And your application must be submitted by no later than June 30th. Now, the June 30th date may change because, like I said, you never know what happens. So I'll definitely keep you informed if that June 30th date is extended. Because people are having a hard time actually applying, because everything is so bottlenecked, there's a possibility that the June 30th deadline might be extended. So how do you calculate how much you're going to get? Well, you can calculate how much you're going to be eligible for by multiplying your 2019 average payroll costs for all of your employees by 2.5. So for example, if your average payroll cost for the month happens to be $10,000, your loan amount is going to be $25,000. So you take the $10,000 and you multiply it by 2.5, and that gives you $25,000. Now, independent contractors do not factor into this calculation, as they can apply for their own PPP loans. So if you're a salon owner and you have independent contractors that work for you, you do not include what you pay them as part of your calculation, because they can apply for their own loans. Okay, so what counts as payroll costs? So I'm going to provide you with a few things that you can use to calculate your payroll costs. There are other items involved, but I'm just going to highlight the ones that are important. So salary, wages, commissions. I'm going to come back to commissions. Also tips. Keeping in mind that when you're applying for this loan, you cannot apply, it's capped at $100,000 per employee. So if an employee makes more than $100,000, keep in mind that when you're doing your calculations, you cannot use a calculation that is over $100,000 for a single employee. Okay. Now, also included in the calculation are employee benefits, including costs for vacation. So if you have vacation time, if you offer vacation time, also family, medical, or sick leave. And in addition to that, state and local taxes that are normally assessed on compensation. Health insurance is also included, health insurance premiums, and any retirement benefits that you offer. So all of these amounts are part of the calculation. And my advice to you is, rather than sitting there trying to figure it out yourself, you may want to either speak with your accountant or even speak with the loan officer who is helping you fill out the form, and they'll tell you what's acceptable and what is not acceptable, because there are so many different things that can be used and so many things that can't be used, that you want to make sure you are calculating the correct amount. So my advice is to go to a professional when it comes to that. Now, for sole proprietors or independent contractors, what's included in the calculation for these individuals is a little bit different. So it includes wages that you pay people. It includes commissions, and also it includes net earnings from self-employment. So the net earnings from self-employment is what you earn as a sole proprietor or as an independent contractor. So you have to look at what you earn and include that as part of the calculation. Now, this is also capped at $100,000 per individual. Okay. So if you are not one that keeps your books on a regular basis, this is a good time to start doing so. That's why it's important that you maintain books on a monthly basis, no matter how small you are of a business. Even if you are a booth renter and you're only making, let's assume you're making $30,000 a year, it doesn't matter. It's important that you keep your books and you maintain your profit and loss statement, because for situations like this, because you're going to need it in order for you to determine what your net earnings for self-employment is. Okay. Now let me go back to commissions for a second, because one of the things that you can use to calculate how much you're eligible to receive is commissions. So in the beauty industry, you have individuals that pay their workers commission. So the term commissions is used under the assumption that you pay your worker as an employee. Okay. So technically speaking, when you pay a person commission, really you are supposed to have them on your payroll as employees. So that is one of the reasons why salaries, wages, and commissions, of course with tips, because you're supposed to pay tax on tips as well. That's the reason why these items are used to calculate how much you're eligible for. Now, for those salon owners who pay their workers commission but treat them like independent contractors, that could be a little bit of a problem because the truth in it, because in the true sense of the word, when the IRS is talking about commission, they're talking about W-2 employees. So the reason why this could be a problem is because if you have to use your 941s, which is your payroll tax return, if you have to use your 941s to determine what your monthly average payroll cost is, keep in mind that the commissions that you pay out to individuals who you treat as independent contractors is not part of your 941. So therefore, you can't use it to calculate your payroll costs, your average payroll costs for the month. Okay, so keep that in mind. In addition to that, because you're paying these commission stylists as if they are independent contractors, they can technically go out there and apply for their own payroll protection plan because they are independent contractors. They are being treated as independent contractors. And what you don't want to happen is for you to include them as part of the payroll, as part of your payroll calculation, and then they turn around and go apply for their own payroll protection plan. So my advice, if you are paying your worker commission, but you are paying them like they are independent contractors, in other words, you're not taking taxes out, then I would advise you not to include that dollar amount as part of your calculation when you're trying to determine how much you qualify for under the payroll protection plan. Let those commission stylists go out there and apply for their own payroll protection plan, okay? Now, the next question is, what can I use this money for in order for the loan to be forgiven? You have to use the money for interest on mortgage if you happen to own a building. You can use it for rent, and you can use it for utilities, in addition to using it for paying your employees, okay? Now, the next question is, how much of my loan will be forgiven? Well, that all depends. You're going to owe money when your loan is due if you use the loan amount for anything other than payroll costs, mortgage interest if you own the building, rent, and utility payments. You are also required to spend the money over an 8-week period after receiving the loan. So everything that you spend within that 8-week period is forgivable. Supposedly, if you spend anything outside of that 8-week period, it is not forgivable. I'm not quite sure how they're going to, well, I guess they'll calculate that because you're supposed to keep track of everything you're spending and when you're making the payments. So that's probably how they'll keep track of that. Now, no more than 75% of what you receive can be spent on payroll. So you cannot pay out more than 75% to your employees, and then no more than 25% can be spent on rent, mortgage interest, and utilities. So in order for it to be forgiven, you have to make sure that you're spending 75% on payroll and the other 25% on mortgage interest and utilities. Otherwise, it won't be forgiven. Now, if you decide to spend it on things outside of what it's intended for, keep in mind that the interest rate is really low. So either way, even if it rolls into a loan, the terms of the loan are quite good, so it might not be that much of a problem for you. But that being said, it's always best to stay within the guidelines. That way you don't have to pay anything back. Okay, so you're also going to owe money if you don't maintain your staff and if you don't maintain your payroll levels. For example, your loan forgiveness will be reduced if you decrease your full-time employee headcount. So if before this whole COVID-19, you had 10 employees, and then after the COVID-19, once you received the loan, you're only paying 5 employees, well, a portion of your loan will not be forgiven. So you have to maintain your full-time employee headcount. In addition to that, your loan forgiveness would also be reduced if you decrease salaries and wages by more than 25% for any employee. So what that means is that you have to keep paying each employee at least 75% of their normal salary. So if their normal salary was, say, $1,000, you have to pay them at least $750. If you pay them less than that, then part of your loan will not be forgiven. The next question is, how can I request loan forgiveness? So you can submit a request to the lender that is servicing your loan. So you don't go to the SBA for loan forgiveness, you go to the lender. The request is going to include documents that verify the number of full-time equivalent employees and pay rates, as well as the payments on eligible mortgage interest, the payments on rent, and the payments on utility. So you're going to have to certify that the documents that you're providing are true and that you used the forgiveness amount to keep employees and make eligible mortgage interest payments, rent, and also utility payments. The lender must make a decision on the forgiveness within 60 days. So usually when you submit all the information, the lender is supposed to let you know whether or not the loan has been forgiven or how much has or hasn't been forgiven within a 60-day time period. So what's important is that you maintain good records of how you are spending the money. So for those of you that do not maintain your monthly records, who do not have a profit and loss statement, you're going to have to figure out a way to maintain records and receipts of who you're paying and how much you're paying and what the money is for, because all of this information is going to be required as part of the forgiveness. Next question is, what is my interest rate? As of today, the interest rate is 1% at a fixed rate, which is extremely low. What do I need to start paying when do I need to start paying interest on my loan? So all payments are deferred for 6 months. However, interest will continue to accrue over this time. So if you get the loan, let's say you get the loan on April 30th, or let's say you get the loan in May, you have 6 months before you're required to start making the payments. However, even though you're not required to start making payments for 6 months after the fact, the interest is still going to accrue. Okay, the interest is still going to accrue. The interest is not part of the deferment. The only thing that's part of the deferment is the time in which you start actually making the payments. Another question I get is, when is my loan due? Well, the loan is due in 2 years. So you have 2 years to pay back the loan. Okay, can I pay my loan early? Or rather, can I pay my loan earlier than 2 years? The answer is yes. There are no prepayment penalties or fees for paying your loan back early. Do I need to pledge any collateral for these loans? The answer is no. There is no collateral that's required, and that's a great thing. So if you have bad credit, or if under normal circumstances you have a hard time getting a loan, you should be fine, because there is no collateral that's required for this particular loan, and they don't go digging into your personal financial situation. It's really all just based on what your average monthly payroll costs are. Do I need to personally guarantee this loan? And the answer is no. There is no personal guarantee requirement. And finally, let's talk about the SBA Economic Disaster Loan. Now, this particular loan can only be applied for through the SBA. So you have to go to sba.gov to apply for this loan. You can't apply for this loan through your lender. So small businesses actually started applying for this loan on April 3rd, while sole proprietors and independent contractors can actually start applying for the loan on April 10th, which is this Friday. Now, this loan can only be applied for, as I said, through the SBA. So how does this loan compare to the payroll protection loan? Well, it is different, and some people get it confused, and only because there's so much out there that it's hard to keep straight what particular rule applies to what particular loan. Okay, so for starters, this particular loan provides more money than the PPP loan, but it will take longer to get the funds, and there is no guarantee that you will be approved for this particular loan. Unlike the PPP loan, where it's almost guaranteed that you're going to get the loan, based upon your average payroll costs for a month. This particular loan, the economic disaster loan, there is no guarantee that you're going to get this, you're going to be approved for this particular loan. So that's one difference. Also, with this loan, think longer term support for operating expenses and debt payments for businesses that are experiencing a disaster. Unlike the PPP loan, the PPP loan covers payroll for a very short period of time, so it's short term, and it also covers certain expenses for a short period of time. Whereas with the economic disaster loan, it's more long term. So you're paying payroll costs over a longer period of time. You're paying for business expenses over a longer period of time. So it's basically, it acts like an actual loan. Also, per the CARES Act, Congress has relaxed the documentation requirements for SBA economic disaster loans if you are getting less than 500,000. Okay. Also, expect this loan to take about 45 to 60 days for you to get the funds. Any individual who operates under a sole proprietorship with or without employees or as an independent contractor qualifies for this loan. You have to be a small business with no more than 500 employees. The SBA is seriously streamlining and getting rid of a lot of the red tape that is normally required for this type of loan so that more people can qualify. One great thing about the EIDL loan is that after applying for the loan, you can also request a $10,000 advance on the loan with the SBA, which the SBA is saying that you should receive within 3 days, but that's left to be seen. They say you should receive it within 3 days. I don't know anyone that has received it yet, so I can't tell you if their timing is on point or if it takes longer than 3 days. Now, the $10,000 that you will be receiving is considered a grant, which means you don't have to pay it back as long as you use it for what's in the specifications. Now, the good thing about the $10,000 grant is that you have a little bit more latitude as to how you spend the money versus the PPP. The PPP is very, very specific in terms of what you spend it on, whereas with the EIDL loan, you can actually spend it on other items outside of some of the specifications on the PPP loan. However, you have to make sure that you stick within the specifications in order for this particular grant to be forgiven. And another thing about this grant is I'm not 100% sure if everybody who applies is going to receive the entire $10,000, because as I read it, it says that you can receive up to $10,000. So when it says up to $10,000, that could mean you could receive anything from $1 to $10,000. So there's a possibility that you might receive the entire $10,000, and then there's also a possibility that you might receive just $5,000, and even yet you may only still receive $2,000, because the key word is up to $10,000. So I'm going to keep an eye out for that and let you know if I know anyone who has received the entire $10,000 or if they received less than that. In addition to all of that, you're going to receive this grant regardless of whether or not you are approved for the actual economic disaster loan. So after applying for the EIDL loan, let's assume that you get denied for the loan. However, in the process of applying for the loan, you requested for the $10,000 grant and you received it. Even if you get denied for the EIDL loan, you still get to keep the $10,000 grant and it's still forgivable as long as you use it according to specifications. The SBA loans up to $2 million, which are used to pay fixed debt, payroll, accounts payable, and other bills. It's a 30-year fixed rate at a 3.75% interest rate for profit businesses and a 2.75% interest rate for non-profit businesses. The payments are deferred for up to 1 year, even though the payments are being deferred. So in other words, if you receive the money, let's say you receive it on April 15th, you don't have to start paying it back until April 15th of 2021. However, the interest still accrues. So the interest portion of the loan is not deferred. You still have to pay the interest portion, but the fact that you don't have to start making actual payments is a good thing, because you have a year until you're required to make your first payment. These loans, once again, are issued directly from the SBA and not from your bank. Who qualifies? Once again, small businesses, nonprofits, sole proprietors, and independent contractors can all apply. If you receive $200,000 or less, no personal guarantee is required. Okay, so this is the information that I have so far. As I said earlier, this information could change. It could change tomorrow. So tomorrow, the SBA or the government might come out with amended requirements, or they may amend what they have out there so far. So make sure that you stay on top of what those changes are. I'm going to try my best to keep you updated, either through this podcast or through my Instagram page, which is Desiree Anderson, or through my Facebook page, which is Accountants for Hairstylists, Accountants #4 Hairstylists, or Profit and Beauty. So thank you for listening to today's show. It's unfortunate that this is what we had to talk about. However, be happy, be glad, be grateful that you live in the United States of America, because there are several other countries going through what we are going through, but they do not have the government to bail them out. At least we have the government that is willing to bail us out. Now, the money that we're receiving may not be a lot. It may not be enough for what we are trying to do. It may not cover all of our bills, but at least we are being given something. At the very least, you're going to have enough money to eat. All those other bills, you can put them on hold. Don't have to worry about paying them. Put them on hold until things get back to normal. So you should focus on making sure that you have enough food to eat and that you can sustain yourself. But once again, be grateful that we live in a country where the government is willing to help prop us up. Okay? Once again, thanks again for listening to the show, and keep an ear out for any updates that I may have. Have a great day, everyone.